All right, so that's what's lined up here. Power Pact as always. Mark Matthews of Bank Julius Baer and Company is joining us now to take some questions. Mark, great to have you with us here. Thank you very much. We've got a situation where yields have moved up sharply after the jobs data in the U.S. The dollar has inched higher, and oil prices have moved up as well. What do you make of the situation as things stand, and how crucial will the consumer inflation number out of the U.S. be to set the tone and narrative going forward?
Prashant, I make of it that the big oomph we had at the beginning of the year is fading in markets, and there's not a whole lot of impetus to buy. And I do think there's a risk that the January CPI will come in higher than expectations. The reason I say that is the expectations are 6.2%. But if you go to the Cleveland Federal Reserve's website, they have an inflation research department where they nowcast inflation, and their track record is actually better than the consensus of economists. They're looking for 6.5. So 6.5 would be the same as it was in December, obviously, and not something the market would like to see.
Oh, okay. Mark, good morning, and as always, thanks for being with us. So what is the way to approach Indian markets now? It's been a fairly decent run so far compared to most global peers. The only thing is we're stuck in a bit of a range for the last many days, and now most of the large cues are behind us, whether it's the RBI policy or the budget. Are you getting a sense that there could be a move on the upside in the Indian markets? And if yes, compared to peers like China, do you still believe that China has a bigger edge because of, the valuation comfort there?
Yes, precisely. China's cheap. It really is still very cheap, despite the fact that it's up almost 50% from its low in October. It's still down almost 50% from where it was in 2018. And I know that the geopolitics are heating up with this balloon and these UFOs over Alaska and Canada. But if you think back to 2017, the year Trump took office, the Hang Seng Index, Hong Kong stock market, rose 50% despite the geopolitics. And to my mind, the biggest thing in China is that they've put COVID behind them. They're opening up. I myself have been traveling around Asia the last couple of weeks, and the airports are packed, the airplanes are packed, and there's lots of Chinese people moving around. So that also, I think, could explain the oil price, and the oil price is at the tip of a pennant formation. So technical analysts will tell you when you break at the tip of a pennant, you'll either go up or down. My sense is it's going to go up because China's reopening. Russia's about to do a big new invasion of Ukraine, 300,000 troops massed on the border. So all of that, I think, would be a little bit negative for India. It's dependent on oil more than other countries, and China sort of taking the wind out of the sails. And on top of that, the whole Adani thing sort of casting a pall over the market from foreigners' point of view.
Hi, Mark. Morning. You've made the point that domestic flows are going to lead the Indian markets higher, if at all, and going to give further direction because the FI holding anyways hasn't been very high. But for the past week, one positive was the FIs are selling at least a little bit less. Do you think after the kind of selling they did in January, maybe they're nearing exhaustion, at least in the near term?
Well, Nigel, I don't know. I just think that on balance, the people would be more interested in other places, specifically China, right now. But, the thing that you mentioned about the domestic investors, you're absolutely right. And that's what makes me still like India, among many other reasons. But it doesn't really matter that much if foreigners don't like the market. It would be helpful if they did. But the fact that you've still got this big domestic base of investors that's increasingly attaching itself to the equity market through the systemic investment plans, very reminiscent of the 401ks in America, their retirement plans. And the reason, one of the big reasons why the U.S. market has been the best market in the world historically to invest is that Americans themselves believe in their own market and they buy it for their retirement. And I think that's happening in India now, too.
Oh, absolutely. The equity cult has grown by leaps and bounds over the last many years. Thanks a lot, Mark, for joining in and helping us with your view on the index as well as on the way forward for the global markets. That's Bank Julius Baer and Company. Let's slip into a quick break. On the other side, our entire team will be with us to help us with